Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's May 13th. We got a couple items here on the economic calendar, so let's jump into it. But first, stay till the very end. I will be giving kind of an update of the update on mortgages, what's going on, and what things are going on, the status updates of those type of things, like things are tightening or weakening. More loan programs, losing more loan programs, stuff like that. So I'll give an update at the very end here, so stay tuned. But first, let's jump over to the economic calendar. What we have today is the PPI, or the Producer Price Index. This is the inflationary data for wholesale. It doesn't get a lot of respect out there, but because even though prices may rise on the wholesale side of things, it doesn't always get passed on to the consumer. We primarily look at the consumer one, but it can give us an indicator as to where things are moving towards the future. So as you can see here, the headline number here, PPI had it dropped 0.2% in March, and it was supposed to drop 0.5% in April, and it exceeded that by quite a bit, by 1.3% in April. Now, when you strip out the food and energy, like its other inflationary data, you get what they call the core PPI. And in March, it rose 0.2%. However, forecasts count for no change in April, and it actually went down 0.3%. So the year over year for each one, the PPI, it went from 0.7% all the way down to minus 1.2%. Now, when you strip out the food and energy, get the core PPI, it went from 1.4 to 0.6%. So this shows you the inflationary level that it could get to deflationary. So this is kind of getting kind of scary that we could see deflation uh, with these type of numbers here. So again, this hasn't gone over to the consumer side until we see that on the consumer side. But as we saw yesterday with the consumer, the CPI report, it came in pretty low as well. So let's move along here to the headline news. And right now, the stocks are down. It's kind of got the mood set late in the day yesterday after Dr. Fauci's testimony before the Senate. Basically, the mood soured when basically if we reopen too. The gist of it was reopen too soon, we could have another big outbreak. That was the concern there. Today we have comments by the Fed Chair Powell, basically just just what his comments were. That we obviously this is unprecedented. Where we're at, this is the fastest and most difficult uh, uh, crisis we've faced since World War II. He basically said that we could go into a not only from a liquidity problem to a solvency problem. These are some issues. He says it thinks that we could another stimulus package could help to keep us going from a long-term uh, uh, recovery or disaster or a recovery period. And again, this will be interesting to see what goes. But so this is kind of what's setting the mood today. And of course, all three indexes so far are in negative territory as a result. So let's see how this is playing on the bond market. Bonds are up a little bit. We're only up about 2 basis points from yesterday. Yesterday we had kind of a turn. We were down a little bit, and then we went positive and closed upwards. Today we're up about 2 basis points. So there's still more sideways pattern. Still not enough to make a change in mortgage rates. So mortgage rates remain unchanged from yesterday's pricing. Yields have dropped just right below the 25-day moving average now. It dropped. It's 0.64 is where it's sitting at currently. So that's pretty much about it. If you guys are in California looking to buy or refinance, please reach out. I'd love to hear from you guys. You can either email me or direct message me. If you guys are ready, I will put a link in the description. In there, you can go ahead and uh, fill out your loan application as well as upload any documents you might want to submit, and we can go over that process. And now to updates on the mortgage programs. We've seen a lot of investors uh, suspend their HELOCs, so we're not really seeing a whole lot of HELOCs out there. We are seeing some. Uh, there's a few people doing jumbo loans right now. Not very many. It's primarily the banks or depositors that are doing the jumbos. But what has come back a little bit is some of the non-QM stuff. So we have seen those. The pricing is going to be a little bit different, but those who don't fit the jumbo aspects for those banks, for example, could fit underneath the non-QM. They're going to have a little bit more restrictions than they had before, but those are coming back. I've also seen a little bit of the bank statement loan program and the investor loan come back a little bit. Again, they do have more restrictions, and especially on the cash out side of things. A lot of them don't want to do cash out refinances at this time. Those have a little bit more difficulties right now. And I've even seen the FHA Streamline drop down to 580 FICO score. So we do have some things tightening, like the HELOCs are being suspended. A lot of the big banks have suspended their HELOCs. We do have one investor for purchases only that can do use the HELOC, so that is an option right there. But again, we in some areas things are tightening, in some areas we're seeing a few things come back a little bit. All right, folks. I hope you have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.